So now we're going to take a closer look at another semiconductor company earnings, ticker BE. We have talked about this company before. It's one that, if I remember correctly, deals with packaging, which is a pretty exciting industry right now in the market. Billy, I'll send it your way, as I know you're going to explain a little bit more to the viewers.
Yeah, so we went over, I introduced BE Semiconductor, aka Besi, in another podcast a few weeks ago. If you've heard about the need for advanced packaging, including hybrid bonding, also thermocompression bonding, and those technologies are essential to some of the new chip architectures that they're using to continue Moore's law. Specifically, you might have heard about chiplet architecture, in which I think AMD and Intel are both using that in their newest chips. This is when you basically break a chip up into its functional segments, and then you stitch them all together with advanced packaging, and you're able to get efficiencies that way as Moore's law scaling becomes more difficult. So one of the ways for power efficiency and chip strength is through these new packaging techniques. These guys are at the forefront of the advanced packaging, of the higher end advanced packaging solutions that are just beginning to be used today. But they have a downturn just like everybody else. I would say that, however, the stock popped 7% yesterday after earnings, and it's getting back towards its highs from, I think, 2021 or 2022. And I'll go into why. First, on this first slide, we have the quarterly numbers. Revenue was down 34% year over year. Operating income down 49%. EPS down nearly 50%. So not great. But quarter over quarter, you saw some flattening out because this had entered a correction just like everybody else late last year. However, if we go to the next slide, so why did the stock go up 7%? I think it was probably because of their guidance. They guided for 15% to 25% sequential growth in the next quarter, albeit off a low base, with still good gross margins between 62 and 64%. And operating expenses would be flat to down 5%. Now, they did step up last quarter. I think that might have been timing of maybe stock awards or something along those lines. However, 15 to 25% growth with flat to down operating expenses is a recipe for pleasing shareholders who might think that the bottom is in. And on their call, they had some positive commentary on new hybrid bonding orders. They said they had 3 big ones, and then more interest, I guess, from your TSMC, your Samsung, your Intel, all of the advanced node CPUs. They said things have further improved in terms of demand compared to 3 months ago, and the yields on the existing machines in the fields, they said, had improved a lot. And that's important because if you get high yields, they said it was over 90%, I think. That means customers are going to want more of your machines because it makes financial sense. Again, these are new advanced technologies, so yields can be low sometimes in the initial going, and then they can eventually step up. So that was encouraging commentary. And I think we talked about high bandwidth memory or chips where the CPU is bonded, packaged very close to the memory. Besi noted that some of their newer orders were for some of those applications as well, not just advanced logic. So we're getting into the high bandwidth memory for AI, and that's where hybrid bonding is coming in as well. Uh, However, I didn't write this down on the slide. Interestingly, I think 2025 could be a very big year for these guys because they said the proliferation of chiplet architectures, and then when you get chiplet processors in smartphones, that is such a high volume industry. That's really when these applications are going to take off. But they don't expect that until like 2025 when you have smartphones going to chiplets. They think it'll probably happen in tablets next year. And again, this is just beginning the chiplet trend with high bandwidth memory.
Discover the world of semiconductors without getting lost in the technical jargon. My new membership offers a perfect balance for investors looking to understand this exciting market. Using my electrical engineering knowledge and experience, I will release weekly exclusive videos ranging from quick 5-minute 101s to in-depth analysis, covering not just popular chip stocks, but aiming to explore every public semiconductor. Plus, join a private community of like-minded investors. Finally, I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
And then I'll go on to the next slide. I thought this chart on the left was helpful. This is their orders versus their revenue. As you can see, Q2, Q3 of last year, their orders sort of dropped off a cliff, even when their revenue was still okay. Last couple quarters, they had more orders than revenue, so that's, I guess, incrementally positive for the coming year. And if you look at the stock chart, the stock pretty much tracks orders. So when the orders went down, the stock went down, even when revenue was okay, and vice versa. So their commentary was that obviously we're in a cyclical downturn. There is lower demand from IDMs, and they noted China was still sort of weak. But high-end smartphones was actually a strength, which is weird. And just goes to show you when you have advanced technology, you can move in different ways than the rest of the industry. Orders was lower for both high-end smartphone and lower bookings for sort of the mainstream AI computing. This is compared with fourth quarter. Fourth quarter actually had some pull-ins. So the fourth quarter was a little bit stronger than the first quarter, but orders were still greater than revenue. And then just the final slide, just to give you the long term on Besi's long-term trajectory. If you look at this chart, you'll see that there are obviously cycles. They last about 4 quarters. I'm sorry, these are full years. The cycles are about 4-year cycles, but the long-term trend is up and to the right. And they've been able to expand their gross margins from 34. They've been able to nearly double their gross margin in the last 15 years or so, from 34% in the 2006 to 2009 period. And now they're 62.7 in the trailing 12 months, and they guided for 64. So I don't know what the ceiling is on this, but obviously the differentiated technology is giving them some pricing power, and it looks like they have some solid cost controls as well. So this is a company that, again, has some advanced packaging technology. Advanced packaging seems to be at the beginning of a growth period due to the chiplet architecture, new ways of trying to scale chips. So this is an exciting company to keep your eye on. It's not as cheap as some of its peers, and it is based in Europe. And for some reason, European semi-cap equipment companies seem to be more expensive than the US-based ones. You look at ASML, you look at some of the other ones. But This is an interesting company to keep your eye on. They pay out most of their cash as a dividend, which is variable and it bumps around from year to year. They're also doing moderate share repurchases, but this is a very profitable company that should have solid growth over the long term. And we look to be at a trough right now. So definitely an interesting company, one I'm keeping an eye on. And I will throw it back to you guys.
Thank you for that, Billy. Yeah, this is one that I always get excited when you talk about it, Billy. I mean, right now, a lot of this stacking or advanced packaging is mainly seen on either very high tier consumer products or in data center products as well. So like you mentioned. I mean, eventually, a growth opportunity, like you mentioned, is the consumer phone industry, which is pretty big. But then just consumer electronics itself, where they're not really hitting the entry level price point, is more just like maybe those high tier level price points. I do have two quick questions for you, Billy. Random, if you were to put it, let's say there was a rank of zero being a company being undervalued, 10 being overvalued, where would you put Besi right now in a ranking wise?
Ooh, I would say, that's really hard to say. I can't even say because some of its peer, so it's U.S. Based peer Kulik and Sofa trades at like a single digit PE ratio, and Bessie's at 26.
Mm,
However, Besi is much more tilted towards these advanced solutions than Kulik and Sofa is, which is more the traditional wire bonding, which is more cyclical. Um, on the other hand, I also don't really know how big their business could be if the hybrid bonding really takes off and gets into smartphones, high bandwidth memory. I'm not quite sure how large that TAM could be. It could be pretty large. It could be moderately larger. Um, so I don't think it's overvalued. At 26 times earnings, I'm not sure it's a bargain because the
hmm.
company's trading at all time highs. Uh,
Oh wow.
it just, well, it's about at the same level as late 2021 now, basically, when the market peaked.
Yeah.
Um, so uh, it's on my watch list. It's not one I'm rushing out to buy at these prices. The time to buy was obviously a few months ago, just like it was for everything else in the semiconductor world in late 2022. Um, but I don't know. It's a tough one. It's a tough one for me because I'm very enthusiastic
Uh,
about the company, but the valuation is also higher than its peers, who should also benefit from these trends, but perhaps not as much. If that makes sense.
and then the second question I had before passing over to Bill to Nick, you answered part of it already. I was going to ask what are some of the peers that we should watch out. You mentioned Kulik and Sofa, but you did mention that that's more in a different type of packaging, not the advanced packaging. Is there any other peers that you might just have that maybe investors should kind of keep an eye out in, maybe that advanced packaging side, Billy?
Well, those are the two. Kulik and Sofa does have some advanced packaging solutions, and they're going to compete with Besi. But the advanced packaging solutions for Kulik and Sofa is a relatively low portion of their overall revenue base, maybe like 20% or something. Whereas Besi, it's a majority because Kulik and
Hmm.
Sofa has the traditional sort of plain vanilla wire bonding, which it dominates, but which is also it's not the latest and greatest technology. But it continues to grow modestly with the semiconductor industry because it's low cost. Um, there's also ASM International, which I think has a little bit of packaging. Uh, well, they're more etching. They have some interesting technology. They're both front end and I think back end. I think Onto Innovation has some back end. They're both their metrology and their back end solutions as well. So you could say they're a competitor. I'm not sure. I'm not exactly sure if the specific technologies they have go with each other, but they also have a packaging division as well. So those four are ones to keep an eye on. The two main ones are Besi and Kulik and Sofa in my book. Nick, do you know any others besides those four? I think there's some Taiwanese or Chinese players too that I'm not as familiar with.
Yeah, it's a weird market. It's a smaller market. Back end packaging is much smaller than the front end wafer equipment side. Um, but you make an interesting point, Billy, about that possibly changing. I think packaging has largely not been. We could get by with existing packaging technologies for a long time now, but that's beginning to change as Moore's law slows down. So you're correct. I think BE Semi and Kulik and Sofa, Click, KLIC, are the top two in this space.
Yeah.
There is potential. I'm not touching it now, but there is potential in the actual packaging companies themselves, like Amcor does a lot of back end packaging and has a lot of back end packaging technology as well.
Mm-hmm.
And they work pretty tightly with like TSMC and companies like Besi and Kulik and Sofa. So that's not on the equipment side though per se. I think Besi is kind of the leading player in this space.
Thank you for that, Nick. Billy, any final thoughts before we close out the topic?
No, it's just don't ignore the packaging companies going forward. I would stay tuned to exactly how much companies are going to have to lean on packaging versus the front end going forward, because there is this train of thought that whereas the front end wafer guys got such a big growth boost in the last 10 years, that could go to the packaging side. We're not exactly seeing that yet, but it's definitely an idea that's out there, especially when we get into this chiplet thing, which is just taking off. And we're just getting sort of the first processors made from chiplets just coming out now. So definitely something to keep on top of, and maybe buying both Click and this company wouldn't be the worst idea for the long term. They're off their lows quite a bit, but so are a lot of things. And I like both of them.